Once you reach a certain age, most retirement accounts require you to take an annual required minimum distribution, RMD. If your other income is already covering your expenses for the year, you may be wondering what to do with the amount you require to withdraw from your 401k. Leaving money in a checking account can be dangerous, as it will potentially invite inflation risk. Even if you don't need extra money, it's still a risk. If you are here and watching this video, we've got you covered. Continue to watch this video till the end and you will have your questions answered. If you're new to the channel, this is Lavish Luxury. And if you're not already taking action, please don't forget to subscribe to the channel with the notification bell on. Let's get on board to master your money and build your wealth. Now, let's head back to what we have for you today. You may wonder if you can reinvest your required minimum distribution into something else. The answer is yes. You can invest an RMD in a taxable investment account, but not back into most retirement accounts. We can help you choose investments you'll be happy with. How RMD and Roth IRA works. Traditional IRA contributions are made with pre-tax dollars, allowing taxpayers to take a deduction for the tax year they were made. On the other side, IRA distributions are taxable as income and come with an IRS penalty if withdrawn early. With Roth IRA contributions, your contributions are made with after-tax dollars, which means you don't get an upfront tax break, but the money can be withdrawn tax-free in retirement. A 72-year-old traditional IRA owner must begin making annual withdrawals from their account. With no RMD mandates for Roth IRAs, they are a transfer vehicle of wealth. Investment of an RMD into a Roth IRA. In 2021 and 2022, the annual contribution limit if 50 or older is $7,000. This includes all of your IRAs, traditional and Roth. If you are going to contribute to a Roth IRA, the IRS requires that you earn enough money. You might have other sources of earnings beside your wage that could be contributed instead. If your annual retirement planning deduction, RMD, was less than $7,000, then you can deposit the entire amount into your Roth IRA account. If your RMD was more than $4,000 and you also contributed to a traditional IRA that year, you can place just half of your RMD into a Roth IRA. The rules for Roth IRA contributions are based on your income and tax filing status. If you have modified adjusted gross income, MAGI, in the Roth IRA phase-out range, you can make a reduced contribution. You can't contribute if your MAGI exceeds the upper limit for your filing status. For example, if you are filing jointly with your wife and your MAGI is less than $204,000, then you could contribute up to $6,000 or $7,000 if you're age 50 or older. At the same time, if your MAGI falls between $204,000 to $213,999, then you could contribute a reduced amount. Now let's say that your MAGI is $204,000 and above. In this scenario, you would not be able to contribute at all for the 2022 tax year. How to avoid RMDs. Is there a way to convert your traditional IRA into a Roth IRA? That's called a Roth IRA Conversion. Roth IRAs don't require annual distributions, so you will no longer have to withdraw funds from the account when it's time for an RMD. With this strategy, the Roth IRA conversion will be taxed as an event, and the taxes on those funds may amount to a substantial sum. This is because Roth IRAs are tax deductible when your contributions are made, and the conversion of those funds requires you to pay what you deferred on your traditional IRA. It's worth considering if a conversion is worthwhile for your financial security, as there are other factors to consider than the RMD issue. For example, converting money to a Roth IRA can result in higher tax rates. This can sometimes lead to your marginal tax rate increase. If you are converting to a Roth IRA, remember to withdraw the RMD from your traditional IRA one last time in the year that you converted. That's necessary because the conventional IRA still existed during that year. Tax factor. You can use an RMD for many purposes, including discretionary spending or supplementing retirement income. RMDs can be reinvested, except in the case of traditional and Roth IRAs. The type of investment it uses depends on how it is taxed. Owners of mutual funds will also pay taxes on their dividends and earnings during the holding period. For example, capital gain taxes are typically applied to profits made from selling stock. Then, when the mutual fund owner sells their shares, the earnings will be taxed as capital gains. Another option is to invest your RMD into a 529 account, which can fund educational expenses such as apprenticeship programs, tuition, and student loan payments. A 529 plan provides compound interest, it accumulates on an already tax-exempt basis, and the funds can withdraw tax-free. Is there an age limit to convert to Roth IRA from traditional? There is no limit on when some IRA money can be made in a Roth IRA, just like there is no limit on when to convert your traditional IRA into a Roth IRA. RMDs to be considered as earned income. Required minimum distributions from traditional individual retirement accounts are taxable income. The payments can be kept with your heirs and passed on without tax. Unlike traditional IRAs, Roth IRA beneficiaries do not have the burden and pressure of complying with RMDs. How are a Roth and an RMD withdrawal handled in the same tax year? For holders with a Roth IRA, the withdrawal must occur before the conversion. Roth IRAs have no required minimum distributions, RMDs, during the account holder's lifetime. So if you don't need the money, Roth IRA can continue to grow tax-free for your heirs. Traditional IRAs do not have this flexibility, and you must start taking RMDs at age 72, whether or not you want the money. As long as you have enough earned income to cover the contribution and your IRA withdrawals don't exceed your annual income levels, it can be wise to deposit your traditional IRA's RMDs into your Roth. This will help boost your retirement savings and stay on track with the rules for your traditional IRA. Hope this will help you make an informed decision. Thanks for watching the video. Don't forget to like the video, subscribe to the channel, and turn on the notification bell button. See you in the next video.